Hi, good morning. This is Marie Gibson with just a quick snip on accounts payable in the QuickBooks Online software program. I've had a brief question from a nonprofit that has been helping me, and I've been conversing with them about a cat issue. So I love my cats. As you know, I also rescue and rehab the horses that need a little extra TLC. So I often get involved with nonprofits. But the question is something that comes up over and over again with not just nonprofits, but with farmers, and I've seen it with small business owners, is you end up with a ton of accounts payable. So in this case, I've opened up Craig's Landscaping, and let's say with Jenny, let's see, we did computer repairs, and it might be $250. And that might belong to a customer, might not, might be taxable, might not. And we have this particular bill. Now, what happens is when we save this bill, and there's all kinds of messages, QuickBooks Online is very message driven, it will show up in a report like this that's called an accounts payable aging summary. It shows me the bills that are currently due. And oftentimes there's a lot of bills that are old on here because people entered bills, but then they reverted to a different way of paying. They didn't actually use the pay bills button. So there's a button when we pay this bill, it would remove it from this accounts payable report. When these get stuck on here, the question is always how to clean them up. So if they're on this report, they're actually been included in your profit and loss report, right? So they would be showing up as expenses during this time period. And if we went down here to, this is a sample company. So let's see if we can find where that little $250 is that I just popped in here. It'll show up in this queue. Now, when you then have a profit and loss, then that affects your net revenue, your net income. And basically then if you've doubled it because you entered it through a bill and you entered it as a check or as an expense or as a credit card expense, then what happens is you've doubled those expenses. And if it's in a prior period tax year, if it's in last year and you've already filed your taxes, you don't want to touch, you can't just go in and void it, right? You can't just go in and delete it. So if this was something that I added and then next month or a couple months from now, if it's in the same fiscal year, I realized it was a duplicate, then I could actually just pop in here and I could say, you know, thanks so much, Computers by Jenny. This happened to be a duplicate and I really don't need it. And so I would delete it at that point in time. You cannot do that if it's in a prior year because the person who prepared your tax return will be most upset with you because those periods, those prior periods should be closed and not ever touched. So how would we actually get those cleaned up then? Say that these were all old and I needed them off there. I've already paid. That's not an outstanding bill. And so we would say this $241.23, if it happens to be last year, I would actually need to create a credit for this. And so let's go to Nick Brosnahan and we'll go into the vendors and we'll find Nick. Well, I thought we could find Brosnahan. There he is. All right. And so in this case, I have a couple of bills. This is interesting. This is miscellaneous and opening balance that was being brought in. And then here's the insurance bill that I think I owe. And I can actually create a credit, right? And so I would credit that $241.23 to 41.23. And then people always ask, well, where does the credit go? Well, if the credit is, say, that you want to keep a paper trail or you have a very strict board of directors, I would credit that back to the insurance there we go. It was posted originally to this, I would credit it back to the same account. If it was a small amount, I might even credit it back to that same expense for a prior year, right? So say like last year, we accidentally got two bills. Speaking of cats, last year we exited, so $241 might be pretty minuscule. I might also credit it back. Or there's something that's called, I've seen a lot of the CPAs using a lot of the tax professionals, they'll use an account that's just, it's called an other expense. It's down at the bottom of the profit and loss. It's other miscellaneous expense, and it's called a prior period adjustment. And what it does is when we make that, and I wouldn't do that every time, it would depend on when I might use it, but that is an option. And we save and close that. First of all, we can see that our balance for Nick is back to zero. And then on the profit and loss report, let's see if I actually might go there. I have several browser windows open. On that profit and loss report, if I update that, and I come back into insurance here, for some reason, that little guy didn't disappear. So let's mark him paid. And there we are. We are going to the amount paid. The bill is going to match the credit. And when we've matched them, and this is a little different than banking integration matching, but we've connected these two. We say, oh, look, there's the bill. And oh, look, there's the credit. And they're for the same amount. And we save and close. And then when I go back to my profit and loss report and we update, once again, it should no longer be on this report. And when you're giving a demonstration, you're always like crossing your fingers to make sure that oh, it's still showing up for some reason. It doesn't seem to like, let's change that report date and see if that shakes things up, right? So either that or I might have to go back and check my dates. There we are. It was a date-driven issue. So when you're wrestling with something and it becomes kind of like, why doesn't it do what I know it should do? Then it's a date-driven issue. And so what that also does, though, is when I have that in there, I want to leave this without saving, and I want to go to my payables summary, then that should no longer be on my payables. So it clears this up. I know that people leave those on the reports over the years, and they just kind of collect kind of like little messy odds and ends and loose strings. I personally like to clean those up and bring them current. And oftentimes if they're extensive, I will use that prior periods adjustment just to make sure that the accountants, the CPAs, the tax preparers are paying attention and see what's happening. And there are other ways to clean that up, but that's the most simple, most direct. And so hopefully this has been helpful to you that have been asking about cleaning up accounts payable. I do have actually a white paper on that that's available through Amazon, and I'll make that link available to you as well. In fact, I've been thinking about sprucing it up a little bit. So maybe this is just a little bit of motivation I need to get me going and have that as a download. I think it's $4.95, and I might actually turn that into just a little like, oh, by the way, here's this wonderful special, we all like special gifts. We all like free gifts. So anyway, if this was helpful, we do have a Facebook group that you're welcome to join. It is for business owners or those who run nonprofits, those who are active in nonprofits, and then also farmers and ranchers who are looking for some help with their accounting and their QuickBooks. And so it's a free Facebook group. I look forward to talking with you in there. It's actually called, let me just pull it up for you real quick so you know exactly where to find it and what you'd be looking for. And it's one of my groups. I have a lot of groups. I love the connections we find in Facebook. So it's called Accounting Made Simple for Busy Business Owners. So I look forward to seeing you in there. All right, talk soon.